over the past week, I decided to take a look at the Edge papers that you can usually find in mynews.com. And I find it very interesting, especially the section in personal wealth. So there's this small table called the Lipper Fund tables that show average returns of different asset classes within a given period. So here I would like to share some of the 5-year returns for those different asset classes that I think are relevant. First and foremost, do note that all these data are from existing funds like unit trusts and mutual funds in the market, and also all returns are in Malaysian ringgit with income reinvested. Okay. Malaysian equities, both non-Islamic and Islamic, for the 5-year period of starting from February 28, 2014 to the 1st of March 2019. They both returned 1.6 and a negative 0.4% return for non-Islamic and Islamic respectively. So for that period, for the last 5 years, it was a terrible time to invest in Malaysian equities. You would have been better putting your money into a savings account which at least gave you 3% a year. ASEAN equities and equities from China and US all returned well above what Malaysian equities had to offer. ASEAN equities returned 6.45% over the 5-year period. Greater China equities 11.69%. US equities 11.57%. Additionally, Malaysian bonds, both non-Islamic and Islamic, returned 4.75% and 4.9% respectively. So even bonds outperform Malaysian equity funds during that period. Furthermore, non-Islamic Asian real estate, these are your REITs, your real estate investment trusts. They returned 6.75%, which is fairly decent, a little bit above bonds, which is normal, and still below countries like China and US. So what I'm trying to convey is the idea that to diversify your investment, especially since you're in Malaysia, because Malaysian shares, in the eyes of global investors, are considered emerging markets, Asian emerging markets. A large portion of those returns really depend on foreign investment inflows. So the idea of diversification and not putting all your eggs in one basket is actually achievable if you buy unit trusts or funds. But how much of that goes into which basket depends personally on your finances, because personal finance, to no surprise, is personal. You can have exposures in bonds, REITs, commodities, and using their long-term averages, you can roughly get a good idea on what returns to expect moving forward, and whether or not those returns can help you achieve your goals. So that is all for me this week. Thanks for watching.